The Central Bank Governor Godwin Emefiele told bankers at the 2018 annual dinner that Nigeria's short-term economic outlook remains good. That was part of his very lengthy presentation on November the 38th. The Central Bank Governor, not only in Nigeria but around the world, always gives the annual bankers dinner statement. He's always the chief guest or guest of honor, and every central bank governor uses the occasion of that final dinner of the year with the bankers to give an idea of what the monetary policy has been for the year and what to look for in the new year. So Godwin Emefiele did not miss the opportunity last November to remind everyone what will be, or to give a hint of what to expect in the new year. He says that the financial regulator will maintain the current tight policy stance in the near term. Why? Simply because the rising inflation outlook and the exchange market pressure. Mr. Emefiele also told the audience that the central bank is working with the federal government to present more opportunities and access of local economy to foreign investors. The central bank says as that today the central bank is more committed to creating wealth and putting in place strong policies for job creation, in particular for the youth. He also expressed the commitment of the financial regulator to more stable and resilient financial system. Speaking about the broader economy, Mr. Emefiele says the regulator will act on best available information of current economic conditions and pursue price stability, assuring investors of the protection of their investment by monetary and fiscal authorities. Let's take a little bit of a listen to a part of what Godwin Emefiele had to say, giving you an idea of what to expect when the Monetary Policy Committee of the Central Bank meets in 3 weeks' time. Take a listen.
Given the rising yields in advanced markets, capital flows from emerging markets have increased tremendously. This has led to substantial exchange market pressures in many emerging markets, with FX reserves falling about 25.2% in Argentina, 9.6% in Turkey, and 2.1% in South Africa since the beginning of this year. Also, significant currency depreciation has been recorded in Argentina by 101%, Turkey by 43%, Brazil by 19%, Russia 19%, and India 16%, even as the Nigerian naira has remained somewhat stable. As a matter of fact, a recent Bloomberg data on financial markets performances revealed that Nigeria bond market remains one of the most attractive investment destinations. Currency Bond Index, which covers major emerging markets such as Nigeria, South Africa, Argentina, China, and Russia, in the second quarter of 2018, Nigerian local bond topped the chart with an average total return of 3.2% in dollar terms. The total return is a combination of the price changes in the bonds over the second quarter of 2018, the interest returns, and the changes in the currency. Nigeria's dominance over this period was due to the stability of the investors and exporters rate and the yields being high by emerging market standards. Investors are also sure that they can exit their positions if they need to, which has been crucial in driving other investors back into the Nigerian market. Our outlook and policy thrust 2019. Global growth projections, both for 2018 and 2019, have been revised downwards to 3.7% from 3.9% earlier projected. Growth momentum in the US is projected to remain strong as fiscal stimulus continues into 2019. In emerging markets, growth factors are revised downwards for Argentina, Brazil, Iran, Turkey, and South Africa, reflecting country-specific factors, uncertainties in the financial conditions, and rising geopolitical tensions, as well as higher oil import bills. In light of the current developments in both the global and domestic economies, and based on extensive simulations, the CBN is of the view that the short-term outlook of the Nigerian economy remains good. We expect that in monetary policy stance will remain judicious, research-driven, adequate and supportive of the real economy, subject to underlying fundamentals. You can draw your conclusions from there. The current tight stance is expected to continue in the near term, especially in view of rising inflation expectations and exchange market pressures. Though we would act as appropriately adjust the policy rate in line with unfolding conditions and outlooks, the CBN will continue to ensure that the policy interest rate is delicately set to balance the objectives of price and monetary stability with output stabilization. On GDP, with favorable oil price developments and continued efforts at driving indigenous production in high-impact real sector activities, especially agriculture and manufacturing, the GDP is expected to pick up in the remaining 2 quarters of 2018. This will be buoyed by the anticipated budgetary and electioneering spending in the near term. From 1.5% during the second quarter of 2018, growth is projected to quicken to 1.7% during the third quarter and 1.9% during the fourth quarter of 2018. On inflation, inflation expectations are rising on the backdrop of anticipated politically related liquidity injections. For the rest of 2018 and towards mid of 2019, Nigeria's inflation rate is projected to rise slightly to about 11.4% and then moderate thereafter. On exchange rate, though the CBN has so far managed to maintain stable exchange rate, the current capital flow reversals from emerging markets is expected to continue to exert considerable pressure on market rates. This pressure could be amplified by the forthcoming elections, especially as the political market space heats up. Notwithstanding these pressures, the CBN is determined to maintain its stable exchange rate stance over the next few months, given the relatively high level of reserves. Gross stability is expected in the FX market, given increased oil-related inflows and continued import bill. I'd like to make it categorically clear that sustaining a stable exchange rate is of overriding importance to us at the CBN, even as we continue to put measures in place to shore up our reserves. On the balance of payments, our overall balance of payments is expected to remain positive in the short term. Hoping that oil prices continue to recover, we expect the current account balance to strengthen even further. This will be supported by improved non-oil performance as diversification efforts begin to yield fruits to reduce undue imports. On supporting domestic production, given the remarkable success that has been achieved in stimulating domestic production of goods such as rice, cassava, maize, and etc., as a result of the restriction placed on the CBN by the CBN on access to forex for these items, the CBN intends to vigorously ensure that this policy remains in place and additional efforts will be made to block any attempts by unscrupulous parties. Here, I mean both individuals and corporates that intend to find other avenues of accessing forex in order to import these items into Nigeria. And please, let's listen to this. The CBN's Economic Intelligence and Banking Supervisions Department will collaborate, will work very, very closely with the Economic and Financial Crimes Commission to expose and sanction any bank, any company and or its directors or FX operator that colludes with unscrupulous individuals, companies, to undermine the policy on 41 items.
The Governor of the Central Bank, Godwin Emefiele, giving an outlook for 2019 Policy Trust or the financial regulator. Let's look at the marketplace. As you heard earlier in the program, it was a very roaring day for treasury trading at the FMDQ exchange place. Almost 110